Good morning, everybody. It's Klarenbach with Klarenbach Research. Today is June the 28th, 2024. It's a big day in the grain markets with the USDA report coming out in the next few hours. A lot of uncertainty over what that report will say and whether the markets go up or go down. So we'll just take a break from talking about wheat and soybeans and the grains for the next couple hours anyways. And today I'll just focus on two currencies that are of interest to me. One is the Mexican peso, the other one is the Russian ruble. Now the Mexican peso, I have family that residents there in part of the year, and I have family from there, so it's of interest to me. Now you can see here for the last 30 years, the US dollar has risen in value relative to the Mexican peso, which is not a surprise to anybody, I am sure. What might be a surprise though is how since the COVID highs, the Mexican peso has risen in value relative to the US dollar. So the chart goes down like this actually shows a weakening of the US dollar relative to the Mexican peso until the last 3 months here, where we see some strengthening in the US dollar relative to the peso. Now, this purple line here indicates the 200-month moving average, the 200-month moving average. So if you're familiar with my commentary, I often reference the 200-day moving average, the 200-week moving average. And I use the 200 period moving average. In this case, the 200-month moving average is a good indication of where buyers and sellers might step in, and is exactly what happened here. Buyers stepped in, started buying the dollar, selling the peso, and the pair, the US dollar, has risen relative to the Mexican peso. Let's just zoom out a little bit here. We can see a left shoulder, a head, and a right shoulder. We broke the neckline here, confirming the head and shoulders pattern. Now, a head and shoulders measured move will take us down to 12 to 13, right in this range here, too, of previous supply. So I would not be surprised if the pair drops to this level. I anticipate it. But first of all, we have to stay below this declining 50-month moving average and get below the 200-month moving average. So can the price get this low? Absolutely it can. We don't know when that's going to happen, so we'll stay tuned. Interestingly enough, from failed moves come fast moves, and that's exactly what's happened here. The Russian ruble is of interest to me. I got some colleagues and some friends in Russia, and obviously they're at the center of the news event with a news cycle with the war in the Ukraine. You can see here the commencement of the war, the US dollar just spiked up parabolically relative to the Russian ruble. And from failed moves come fast moves, and that's what we saw here too. So ever since that time in March of 22, the US dollar has lost value relative to the Russian ruble until recently, back in maybe the last 2 years, I guess, the US dollar has strengthened relative to the Russian ruble, which you might expect, and maybe it shows the effectiveness of the sanctions. Interestingly enough, though, the pair now trades below the 50-week moving average, and I don't like anything below the 50-week moving average. I expect nothing good to happen for the currency, the pair, the bond, the stock, the commodity. So right now, we're testing new lows, making new lows below the January 24 low, suggesting that maybe we come down to lower values and test the 200-week moving average. Will that happen? I have no idea, but we are going to stay tuned and see what happens. So the question is, and I'm not a macro guy, but the question for the macro bros is, what's causing the weakening of the US dollar relative to the Russian ruble? My name's Trent Klarenbach. It's rainy in Saskatoon. Life's good.